Hi, today is Friday, October 7th. I'm Jason Shapiro with CrowdedMarketReport.com. This week, I think that the markets offered a great opportunity to observe what I think is ridiculousness, and I'll explain that in a second, but keeping in mind that what you want to do here to make money in the markets, and I'm not talking about day trading here. If you're day trading, it's a different story altogether. But you need to consistently put risk reward in your favor. And that doesn't mean that every trade works. This can't be about this trade has to work for me. It has to be I'm putting good risk reward on again and again and again, and over time that's going to work for me and I'm going to make money over time. Okay. What's going on in the market right now was clear this week is it's all binary, right? Either the Fed is going to come close to stop raising rates or they're not, right? And every time something comes out where you can get convinced that the Fed is on its way to stop raising rates, risk assets go up, stocks go up, bonds go up, commodities go up, dollar goes down. And I'm not talking about oil here because oil is in its own sort of geopolitical world at this point, but commodities meaning gold, silver, sugar, cotton, that type of thing. So it's all one trade, and when something comes out like today, the employment report is stronger than people wanted, then risk assets go down, stocks go down, bonds go down, the dollar goes up, commodities go down. So if what you want to do is flip a coin before these data points come out, then go right ahead. But that's not really a very good idea. You're just flipping coin and you're paying commission, and half the time you'll get it right and half the time you'll get it wrong. And just because you say to yourself, oh, I think that the employment report is going to be stronger, so I'm going to sell risk assets. Okay, you got it right. Great. But it's just like, heads or tails, right? If you call heads and you happen to get heads, it doesn't mean you're great at flipping heads. It just means that it was a 50-50 bet and you happen to get it right that time. Over time, that's not going to work for you. We want to get into good risk-reward situations. And for me, what risk-reward situations look like is markets that are crowded. One side, you're looking to go the other way, one. And B, when the market starts to perform in a way that would indicate that that's the case. So let's take it from there. And let's go ahead and look at exactly this week. The most crowded short positions coming into this week, as I've discussed in my newsletter and whatnot, were gold and silver. Okay, stocks do not show that people are crowded short yet, believe it or not. And again, price has come down, but people are not mega short. The places where people were most short, or I should say least long, was gold and silver. So if you wanted to play the things are going to rebound and go up, that's the place to play it, right? Have we gotten market confirmation? We'll take a look. Here's the S&P 500. That's what that did this week. Here on Monday and Tuesday, we saw this news where maybe the Fed was going to stop, and we rallied, and then we had news that it wasn't going to stop, and it came right back down. And we closed, not on lows, but pretty close to lows, right? The NASDAQ was even worse, right? But look what happened with gold and silver. Gold also went up on that news, right? But look, see, gold was already off lows while stocks were making lows here, right? So gold was already starting to confirm the fact, right? And then when things ripped, gold ripped much more than the stocks did. And when they came back down, as everything did today, they've come down a lot less than stocks did. Silver was even more so, right? Silver didn't even come close to testing these lows down here, right? While stocks did. And when silver ripped, this was a 9% move in a day. Okay, that's like a 300-point S&P move, right? And it gave back some of it, but stocks gave back all of it. So if you wanted to play the rebound scenario, the risk trade rebound scenario, that would have been the pace to play it. You had positioning on your side, you had market confirmation on your side, and that's the place to play it. And that is, in fact, where I am playing it. Continuing to go forward playing it that way. However, I am then on a portfolio basis, I'm long risk there, but I'm short risk elsewhere where people are not crowded short. because, you know, you get inflationary numbers, there's a good chance things are going to go down. And I want to be short something. So what I'm short is, you know, the stock market. So for example, here's the S&P. Okay, so I was short the stock market this week. So I lost, you know, whatever, this much from here to here on my short, right? Hardly anything. But on my gold and silver trades, you know, I made here to here, right? So that's a profitable trade right there, okay? So where else are we looking where things are crowded short on the risk side as another way to play the long side? The only other thing I'm really seeing here is cotton, which had an interesting day today. Cotton tends to be a risk on trade as well. As you can see, it follows the stock market pretty closely, right? Today, cotton closed up, right? Made a new low, reversed and closed up, right? This is the least long. These are the speculators. The speculators have been in a very, very long time in cotton. So if risk is going to go up and cotton is going to be one of the risk things to go up, you're going to have a lot of people that are going to need to buy this, right? And that's why it's going to outperform. So to me, long cotton is a good way to play that too. Again, on an individual trade basis, you stop through today's low, which you're risking 1 day of volatility, right? And if cotton is going to take out the low, there's a very good chance that these other risk assets that you're going to want to be short are going to go down even more. Look at today, cotton was up, stocks got killed, right? You actually made money on both sides. Forget about the relative trade. Now, I wasn't long cotton. I got long cotton at the close. So those are my risk on trades: gold, silver, cotton, where people are not long, and then I'm short stocks where people are not short, okay? And that's really the way to play this sort of binary, what I like to call right now, binary stupidity of, you know, Fed's gonna raise, risk off. Fed's not gonna raise, risk on. You're not gonna get an edge in guessing when the Fed's going to raise, okay? Or when they're gonna stop, right? And by the way, they are going to stop. At some point, clearly, they're going to stop raising rates. And my view, which could be right or wrong, but my view is yes. If they're going to stop raising rates, the market is going to discount that first. So the risk assets are probably going to go up at some point into that last rate rise. And my guess, and we won't know until we get there, but my guess is by that point, people will have bought so much into that, that when they do stop raising rates, the market's going to fail right there. It's going to be buy the rumor, sell the fact type of thing. And that's fine, but that could be right or wrong. We don't know when they're going to stop. It could be in 2 months. It could be in 6 months. Who knows what's going to go on? You've got all kinds of employment reports of CPI and Fed, and the Fed has not indicated one thing whatsoever that they're going to stop right now. So, but the way to play it is through these other things: gold, silver, cotton. Those will go up in a risk up move, and based on positioning and based on market action here, those have a very high probability of going up a lot more than the other stuff. So that is the proper way to, in my view, the proper way to set up to do this right on a risk reward basis, rather than just flipping a coin and be like, okay, assets are going up, I'm getting long S&Ps. Assets are going down, I'm getting short S&Ps. That's just guessing, and that's going to kill you over time. Okay, so that's the idea for this week. I hope it helps. Always happy to hear any questions or comments, and I hope it all goes well next week for everyone, and we'll talk again soon. Thank you.